Good morning, everybody. Thanks for joining us on the call today. My name is Nathan Calley. I'm head of healthcare investment banking at Noble Capital Markets. We're excited to present Electromed and to hear from the CEO and CFO, Jim Cunniff and Brad Nagel. They're going to present the story. It's a growing company, a growing med device company for bronchiectasis. And so we look forward to hearing the story and learning more about the company. So I'll turn the call over to you guys, Jim.
Hey, thank you, Nathan. And joining me today, as Nathan had mentioned, is Brad Nagel, who's our CFO. We are really thrilled to be part of this conference. We've already had some great sessions with some potential investors, and we're excited to share with you the Electromed story. It's apparent to me that there's a lot of folks that are on this call today that aren't familiar with us as a company. So I'm going to jump right into it so we have time for Q&A after the presentation. This is the standard disclosures for us, which I'm not going to go through, but really who we are. I thought I would start with this and just give you a quick rundown on a high level about Electromed. One of the things that's unique about us is we're a microcap company, but we've been around for 32 years. We're based in right outside the Twin Cities in New Prague, Minnesota. We're a domestic manufacturer. All of our products are made in New Prague. We generate roughly about $50 million in revenue. And the market, as Nathan had mentioned, that we serve predominantly is bronchiectasis. And I'll get more into that in a minute. A real quick overview of us, and this is some information which I'll go into a little bit more detail on in the presentation. But as Nathan had mentioned, one of the things that makes us quite unique is that we are growing and we're profitable. So we're not only a medical device company, but we have some other capabilities, again, which I'll share with you in a minute. The market that we play in is respiratory care, and we're a leader in what's called the airway clearance market. So there's a lot of different technology in this space, but really our stock and trade is helping patients clear their lungs. We do that through a technology that's called SmartVest. And the mechanism of action is high frequency chest wall oscillation. And again, I'll show you that mechanism of action here in a minute. And what's nice about it is it's not only unique technology, but it is supported by clinical outcomes data, which is, I think, really important. We also have a direct-to-patient and provider model, which is very different for a medical device company within the home care space. And I'll show you why that's different in a subsequent slide. And then, as you can see, we've got a strong financial profile. We are growing, we are profitable, we have no debt, and we're generating cash, which I think makes us very unique. So let me shift gears, talk a little bit about the disease state that we predominantly care for, and that's bronchiectasis. This is a irreversible chronic lung condition, and this diagram down here depicts basically what ends up happening is a patient has repeated episodes of pulmonary inflammation, and it's really due to infection. And what happens is the normal airways expand and they don't retract over time. And so those airways get caught with mucus, which really prevents the patient from being able to breathe easily. And so essentially what our product line does is it frees up that mucus so that that patient can breathe and have a more active life. A couple of things on the right-hand side of the slide. What we would tell you, and this is a key market development opportunity for us, is that this disease state is underdiagnosed. It's usually misdiagnosed because many of the patients that go and see a pulmonologist, really what they're prescribed is as a COPD patient. And bronchiectasis is under that COPD umbrella, but it is a different disease state. And it's underprescribed, this HFCWO technology. So we think that we've got some really great tailwinds. This is a growing market, and it's also a market that through additional education, we think we can expand. To that end, this iceberg really depicts kind of the current state today for where we believe the opportunity will be. So at the top of this iceberg, you see 127,000. That's the amount of patients who are actually on HFCWO technology today. Of the remaining 700,000 that are part of that 824,000 that have been diagnosed, we believe that there's probably about 230,000 patients that have been diagnosed with bronchiectasis They are not on HFCWO technology. And if you see an average sale price for the technology of about $10,000, we believe that the revenue opportunity, 230,000 patients times $10,000 per unit, is about $2.3 billion. Now, that does not include, the additional, give it 600,000 patients who have been diagnosed that are going to a primary care physician. We think that that's additional upside. And obviously the 4.1 million patients who have not been diagnosed but do have this disease state. So how is bronchiectasis treated with our technology? The cartoon that's kind of on the lower left-hand side, basically we have a generator that's a pump, hose is attached to, that is then attached to a vest. That vest then fills with air and then gently releases and squeezes the patients. We give them 360 degrees of therapy around their lungs. And what that does is that technology actually drives the mucus from the smaller airways into the larger airways so that the patient can then either swallow the mucus and or cough it up. And what that does, it doesn't cure bronchiectasis, but it does improve the patient's quality of life so that they can walk, they can go to a movie, they may be able to go to a restaurant, but it's really freeing for that patient. We get asked a lot, how often does a patient need to use the technology? It's typically used twice a day in 30-minute sessions, but because this is a chronic, irreversible disease, the patient is going to need to use the technology 7 days per week. This is a clearer depiction of what the product looks like, and we're really excited about our Clearway device because we have the newest HFCWO device on the market today. And as you can see, it's a really slick design. So we've got great industrial design. This patient predominantly is going to be used in the patient's home. So it's very attractive. It's a very intuitive product. So there's no on-off buttons. It's just a touch screen. And we do patient training. So when we deliver the device to the patient's home, we actually have a respiratory therapist who will meet with the patient, make sure that they're comfortable with the fitting of their vest, and also make sure that they understand how to use the generator that's there. And we feel really great about this technology, and it's gotten really rave reviews from patients as well as providers who prescribe this technology. The other thing that's unique about our vest in particular is we use Velcro straps, which are a lot easier for patients who have osteoporosis to navigate versus our competitors who typically use buckles. So we feel really good about this. The other thing that we provide, which I think is a value add, is not only best-in-class technology and best-in-class sales team, but one of the things that we do is we make sure that we follow that patient's progression. So I know this is a bit of an eye chart, but when we deliver the technology to the patient's home, we take an assessment of how they're doing, and that's what's called a CAT score. So down the lower right-hand corner here, things like, how's their cough production? Are they walking? How active are they? These are ratings that the patient provides. We give that to the prescribing physician at the time of training. We also do a follow-up after 5 days, and we do an additional follow-up after 30 days. And so we help to see that the patient is progressing, and also those touch points with the patient through a respiratory therapist is one of the ways in which we make sure that they feel comfortable in being compliant with the technology. This technology works. So obviously, with managed care, one of the things that you want to prevent is a patient from entering a hospital and from getting readmitted into the hospital. One of the things that we're excited about is when a patient goes on this technology, we find that there's 59% fewer hospitalizations for exacerbations, and that's where their disease state gets worse from the baseline. And there's a 75% reduction in ER visits. So the technology does as advertised. So what are the markets that we serve? Right? Our predominant market is home care, and this is where we basically work with prescribing physicians. They write a script for our technology, and then we work directly with the patient and the payer to make sure that the patient gets the technology. That's about 95% of our revenue. A nascent piece of our business is in hospitals. This is really a capital sell into the hospitals with our generator. And then there's reoccurring revenue on our vest and our hose, and that's about 4% of our revenue. And then international is a very small segment of our revenue stream, and that's done globally, but it's done through distributors in market. I mentioned before at the onset of this presentation, our model and how it's different. In the space that we serve, not only the home care, most manufacturers, what they'll do is they'll make the product, but then they'll sell it to a durable medical equipment distributor. That durable medical equipment distributor will then get a prescription for the device, and then they will deliver the product to the patient. They'll work with the payers on reimbursement. And our model is very different in that we're a medical device manufacturer, but instead of going through a DME, we actually will go direct to the patient. So we will get the prescription for the device. We have payer contracts both with CMS and commercial pay, and then we'll help the patient make sure that they get reimbursement. We deliver the product directly to the patient's home, not through a distributor, and we also do all of the patient training. How is our revenue breakdown? I talked before about the settings, so most of it's in home care. Where we get most of our reimbursement is through Medicare, as you can see, and then through commercials, our second largest payer source. And then, as I've been talking about in the presentation, most of our prescriptions that we get are for patients who have bronchiectasis. But as you can see in that pie chart, there's other disease states that this product is akin for. So what is our growth strategy? How are we looking to take market share? One of the keys to our success is, we have a focused sales organization, unlike our competitors. Most of our competitors within their portfolio, they're respiratory, general respiratory care manufacturers and distributors. We have a N of one. We have a single product, which is predominantly single disease state that we're caring for. And we have been really successful in growing by continuing to add feet on the street and also adding additional investments internally on the reimbursement landscape so we can support our territory expansions. We also do direct-to-consumer and physician marketing. So as you can imagine, if you're having a hard time breathing and what you're using today, whether it's a prescription drug for an infection or a less powerful airway clearance device, many of our patients go online to look for answers. We've got a really strong direct consumer and physician marketing leg of our team, and that generates leads for us that we can then follow up with those patients with respiratory therapists and then get those patients to a prescribing physician to get our technology. I think we've got best-in-class customer care, not only in helping support the patients when we deliver the product, but also making sure that those patients get reimbursed. And then, we are generating evidence so that this isn't an underserved and underdiagnosed and underprescribed market. And we think that that's really going to help unlock that iceberg that I showed you before. And we've got the newest technology on the marketplace today with SmartVest Airway. What are our long-term objectives? We don't give guidance, but for fiscal year 24, we expect to have top-line growth of 15%. And one of the things that's been unique about this year in particular is not only are we growing the top line, but we're continuing to have operating leverage, and we expect that to continue to grow. So we think this is a great opportunity. If you're new to our story, the market that we're serving is large. It's expanding with some great tailwinds. We've got a great reimbursement there. Pathway, the product line and the technology is clinically proven. We are growing and have been double digits, all of it organic, none through M&A. And as I mentioned before, not only are we growing, but we're very profitable, we're generating cash, and we have no debt. The last piece I would leave all of you with, and I think, again, in the spirit of being aligned with our investors, is when I came on board, all of my incentive compensation is based on increasing total shareholder returns. And so if the stock improves, then I get a benefit compensation-wise. If it doesn't, I don't benefit from that at all. So I think, I clearly am an incentive to improve the value of the company, and in turn, that helps all the investors. In addition to that, all of my management team, we changed their incentive compensation for fiscal year 24. And this is something which we will promote going forward, where their incentive compensation is predicated on us growing revenue and earnings before tax. And so I think hopefully if you're new to our story, you feel like we've got great technology, we're in a great market space, and myself and the management team are really aligned with our investors. So with that, I'm going to stop sharing and we're going to open it up for Q&A.
Thanks a lot, Jim and Brad. Very exciting story. And congratulations on the growing revenue and the cash flow.
Thank you. We appreciate it.
So one of the things that came out in, when you were presenting that I had a question on is cutting out, sort of eliminating the middle man here and a direct to patient strategy, which seems like on the long-term growth side is going to be very effective for you guys as you grow the business. So can you talk about that a little bit and how you're able to achieve that and, what your expectations are going forward?
Yes, I mean, if you look at our gross profit margin, I think within the home space in particular, we're mid-70s gross profit margin on our product. And I think because we go direct to the patient, Nathan, that enables us to have that profitability. The reimbursement on our technology also is very robust, both from CMS, which is kind of the benchmark, as well as our commercial payers. But that model has served us well. And we feel like, with this disease state in particular, that the more that our prescribing physicians are aware that when they see this patient that presents to them, that this patient may have bronchiectasis, and we're doing a better job of market development, which we're investing in, I think we're going to see not only, our boat rise, but we're going to see the boats of all of our competitors rise as well. This is just a really underserved market. So I think that direct-to-patient model for us serves us well. That being said, I think there is opportunity for us to work with some DMEs in certain markets where we might not have the payer coverage that we need, and or they have a void within their portfolio where they're serving the pulmonologist with a whole raft of different products. This may be one of many products within their arsenal, and it complements their bag, and it doesn't tread on our direct-to-patient model. So that is something that we think we can coexist with DMEs in certain markets, but it's certainly, our strategy is not to open that up broad-based like some of our competitors where they go exclusively through DME.
That's great. How many reps do you have now in the business?
We have over 50 direct sales reps.
And can you talk about your plans on growth on the rep side? Are you growing it fundamentally, organically, or what are your thoughts there for?
Yeah, it's all organic. So the sales reps that we have, we don't have any 1099 sales reps. They're all direct sales reps. They're all Electromed employees. We do all the training. And we are looking to expand our sales capacity annually. So I can't speak to Nathan specifically what the numbers are going to look like for next year. And we're closely approaching that. We're working through our budget and our strat plan for next year. But one of the things that we have to be really thoughtful of is in the way the analogy I give is our sales reps are kind of like franchise owners. They've got a set geography. Unlike a franchisee, they don't have any capital that they need to invest in being an Electromed rep, but they get all the benefits of being a franchisee. So we give them a territory. They've got a nice geography which they can work. We have an open-ended sales compensation plan for them. And so when we add reps, we have to just be really careful about, when we shrink a territory, how do we do that so we don't disadvantage a great rep, but we can also grow and better serve our prescribing physicians. So we're really thoughtful about doing that. I think our biggest opportunity is to make sure that when we have an opening, whether it's, a sales rep goes after a new opportunity with another company or we performance manage them out, is that time to hire to get that replacement. We've really been focusing on shrinking that because, this is a show up business. sometimes out of sight, out of mind, you won't get the prescription. So we want to make sure that we're front and center with our prescribing clinics.
Great. One question, what's your percentage of repeat business and what's the longevity of the product? So if someone purchases it, does it last a full year? Are there components that are replaced? How does that work? And then on a direct to customer, are the reps visiting the customers or how does that work?
Yeah, Brad, you want to jump in? We'll give you some airtime here.
Yeah, happy to take that one. So with the device, we offer a lifetime warranty with the device, and it's for a couple of reasons. One, competitively, when we sell our device, we want our physicians and the patients to know that they've got a partner for life. There's also a very practical reason from a reimbursement perspective. It's uncommon for one patient to get coverage for our therapy multiple times in a lifetime. So that reimbursement is very healthy for us, and it allows us to be able to offer the device and any repair or maintenance that could be needed on the device. That said, it's a pretty robust device, so our repair costs are relatively low. So it makes all the sense in the world for us to be able to offer that to our customers.
Excellent. I've got a question. It looks like you had profitability breakout last quarter that clearly investors like. Given the market reaction, what are your strategies to ensure growth is profitable with increasing operating leverage, not just top line?
You know,
Yeah,
I
I
think
see.
for that, but go ahead, Brad.
I was gonna say, I think both of the questions in the chat, what happened in February? Why did the stock take off a bit? I think it ties right into what Jim was saying about the investment that we've made in our infrastructure and our sales team. The reimbursement infrastructure that we have really gotten us to a point that gets us excited about where we are as a company. We've made a lot of investment into being able to go direct to customer and really see ourselves as sort of at a tipping point where we are able to unlock and drive leverage with all of that infrastructure that we've built. We got the right sales team in place. We've got the reimbursement infrastructure that Jim described as best in class. My team also unveiled a new ERP and some of those IT and system infrastructure pieces over the last year. And so I think we saw that in last quarter. And again, Jim mentioned we fully expect to be able to keep investing in the business. We are going to continue to grow our sales team, but we think that we can do that in a more leveraged way going forward. And that's what we're so excited about for all of us and our investors.
Great, thank you. As far as the competitive landscape, how many is there many or is there few with a similar product? And with such a large market opportunity, is that the addressable market today, or that's the patient group that's out there that does not have these types of devices available to them today?
Yes,
or has that market already been built?
I know we're kind of running out of time, so I'll try to hit this quickly.
Yes.
We could all define what is a lot of competitors, David.
Yeah.
Say it's a bit of a oligopoly. I mean, there's four companies that are in the market today. There's two of our competitors that have very similar technology that we have, but it's dated. Their vest has clips versus Velcro. So for elderly patients who may have osteoporosis, it's more difficult to use.
Sure.
We have a single hose device. There's our dual hose devices. And so we're different.
What does that mean, dual host device?
So if you may have seen the depiction that I had in the presentation, we have a generator that's attached to a hose that's attached to a vest. They have two hoses. We have a single hose. And so it's a lot more for the patient.
Sure. Sure.
And it's not as cumbersome. So we feel like that's, we could say it's a great innovation, but it is a differentiator for us because it's not, again, as cumbersome. So that's one piece of it. There's last competitor that has a portable vest that's almost like a life preserver. And their technology is more vibration based. So think of like a Theragun in certain segments of your lungs.
Yes.
In that 360-degree coverage. They go exclusively through DMEs. And their product is battery operated versus our product, which is, it's attached to standard electricity in the patient's home. So very differentiated technology. So on that front, we feel like we're in a really good space. And I think the addressable market, what's neat about it is, and I mentioned there's probably about 700,000 patients who've been diagnosed with bronchiectasis. And well, there's over 824, but 127,000 of them are on our technology or competitors' technology today. There's about 230 of the remaining 700,000. That's the sweet spot that we believe, because those are the patients who are being seen by a pulmonologist, and the pulmonologist is typically the one who will prescribe this technology. It's not a primary care physician. So,
Right.
So if the patient's being cared for by a pulmonologist, we feel like that's really where the opportunity lies. And we feel like they're becoming a lot more educated on bronchiectasis. They're seeing the benefits of putting a patient on this technology sooner rather than later. And I think if we can get that flywheel really spinning,
Yes.
we're going to see this market in a much better light from an adoption standpoint.
So is it correct to say that on the cystic fibrosis side, that's where the vibrating products originated from?
Yeah,
Yeah.
yeah.
So that's sort of not a legacy product, but so your product is a little bit more of a new product, so you can break into those 230,000 patients that do not have a device.
Right.
Maybe a vibrating
Bronchiectasis. So that doesn't even include CF.
right.
The CF patients are typically being cared for initially within Children's Hospital. And as I showed on my slide, our hospital business is about 4% of our revenue. So it's not a huge focal point for us.
Can you just run through quickly, last question, your cap structure, cash, debt, and then what kind of CapEx you guys expect over the next 12 to 24 months?
Brad, you want to take that?
Yeah, happy to. So I think Jim started with a comment that we are growing, profitable, and adding cash. As of our last quarter, end of December, announced results, we were a little over $10 million worth of cash. And we are in a position where we, again, expect to continue to grow profitably. And as we add to that cash balance, it really gives us options. And we hear a mix of things from our investors, because we are a single product company and we are reliant on the reimbursement landscape, which we continue to see as very strong into the future. We do want to carry enough cash to be able to kind of weather storms. But we also, have other options available to us to maximize shareholder returns as we build that cash pool. And all of those things are absolutely under consideration as we think about our strategic planning that's underway right now.
Yep, well said.
No debt.
No debt. What's your fully diluted share count today? And
About 8.7 million shares.
excellent. Thanks a lot, guys. Thanks for taking all the questions, and happy to have you here today at the conference.
Nathan, thank you. And thank you for everyone's on the call. We appreciate the time and attention.
Thank you.
Okay.